Hello everyone, I hope you're all doing well. Today I want to introduce you guys to a concept that I have decided to call inducement macros. Now this is something that I have not talked about before, so this will be the first time that I'm coming up with this information. Basically, I'm going to be highlighting specific macro times where I look for reversals. So I look for entries, reversals, manipulations during these times, and they are a little bit different from the macros that I have talked about previously. Now, as most of you already know, the macros are specific time windows where we look for price to manipulate or expand. So these are designated times where we like to form our trading ideas around, and we like to enter around these times, or specifically look for some sort of liquidity being purged at these times. Now we have a few different types of macros. We have the classic ICT macro, which is your 50 until 10. So for example, here we can look at 9:50 until 10:10. So that's the 20-minute window that ICT is referring to. Now, I've also talked about in the past about extending this to 45 until 15, which broadens the window a little bit. And this is mainly what I've been discussing whenever I've talked about macros. But there is a way of getting even more precise within these time windows, and also within windows that normally you wouldn't consider to be in the macro, but technically are still inside of those inducement windows. Now, when I say inducement, I'm basically talking about a trap, a fake out, a sort of manipulation. So that's why I decided to call it inducement, is that price will induce, basically fake people out, make them think that it's going to go in one direction when it's going to go in the opposite. So these are your manipulation windows essentially. Now these times are fixed, and I'll show you what they are fixed to, but you can see right here we have XX20 till XX32, 58 until 10, 50, 02, 28, 40, 20, 32. You see how it repeats? Because these are 12-minute windows. So I've extended them till 12 minutes. So you'll have right here a total of 12 bars, and it's going to be the same for every single macro that you have. But there is a spacing because these happen inside specific time sessions. And these sessions are not based on something that I talked about before. It's something that I want to talk about now, and also I'm going to be referencing a lot more going forward. And these are going to be your quarterly cycles, quarterly sessions. And we also have our micro sessions. So just to show you guys a little more about the logic behind these time windows, I'm going to enable a couple boxes for you so you can take a look right here. Now using my trade the unknown indicator, I've gone ahead and enabled the quarters here. So if you're not familiar with quarterly theory, not going to spend too much time talking about the concept here, but basically you have 4 quarters. This is fractal across all different time frames. And you have your sessions that are split into 6 hours. Then you have your 90-minute sessions inside of those again. And then you have your micro sessions inside of those 90 minutes again. So basically, these inducement windows happen right around the open of a new micro quarter. So these windows are, of course, used for intraday trading. As you can already tell, this forms around the open of the second quarter of every cycle, and also around the end of the third quarter and the start of the fourth for every cycle. So it's the same across every single one. Basically, what I spent a lot of time on was looking into where are the manipulations happening, how are they happening in accordance with the quarterly opens, because if you know about quarterly theory, you will know that the second quarter is your true open, and there's a reason for that. This is usually where your manipulation will happen. And so what I did is I defined a specific window of time, which doesn't necessarily match with the other macros that you've been taught before, but these are repeating on every single cycle throughout the day. And so these 2 windows, you can have your manipulation and your distribution inducement. This is the way I've split them up into 2. So you have manipulation, distribution. Now, what we're looking for in general is that around the first inducement window of a quarter or of a quarterly cycle, such as this one, we're looking for that manipulation. So ideally what you want to see is that during this time, price will manipulate in a specific direction, and you're going to look for the opposing liquidity pools. So let's say that here, as you can see, price opens and this micro quarter right here goes up, takes out this high, doesn't quite take out this high, but we are above the true micro session open right here. So we want to sell above here. And you can see that it manipulates higher. If you don't get in here, you can wait for clear signs of distribution. And you can see that with this candle, once you get that retracement back in here, you can consider this high to now be the high of this inducement window. And then what you're going to do is you're going to wait for price to reach your targets. Now, ideally, for example, here, we can see that it sweeps a previous 90 low, which was the third quarter of London right here, takes out this low. And in most cases, you might think this is going to be your reversal point once it's been swept. But this is why I have specifically marked out the second inducement, which lines up in accordance with these quarters here, to start a little bit later. And you'll see that here, you get a fake out, right? Price displaces through this imbalance, which formed through this low, and you might be thinking why it failed. Well, price goes down one more time, taking out this low, because this low formed in the center of the quarter, in the midpoint. So this can be engineered liquidity right here. Comes down inside of the second inducement window, takes out this low, and forms the actual low of the quarter. Look, this one did not take it out. Instead, the low formed right here. Then you can wait for signs of reversal that fit your model. And so instead of limiting yourself to only entering inside of these windows, you're using them as a gauge. So you're going to be gauging, has the manipulation already happened? If so, what's the next likely target? Because these are usually your manipulation and distribution windows where the reversal or some sort of retracement is going to take place. For example, here too. Look at this window, you get a manipulation down, ends around the middle of this inducement window, which was below the open once again. So you want to buy around here, and then you can target opposing liquidity. And so a lot of the time what happens is that the first manipulation window right here, the inducement window here, will function as manipulation reversal, and the second can sometimes function as a continuation window. So if the reversal happens and price has already started moving into one direction, this window likely is going to be a continuation into that. So you'll see sometimes you get a little retracement and it just continues until the target is reached. Looking at another example right here from London on the same day, you can see the very first London quarter here. We have the open of this second micro session. Price is inside of the manipulation window, and you can see it does not take out the high that formed inside of this manipulation window, inside of the inducement window. Instead, barely stops just in advance and then rejects. So you get your manipulation. And then in the second window, you get your continuation distribution. And you'll see right here, first inducement window of this quarter, price goes up, takes out the high, forms a new swing point, reverses. This is your manipulation. And then what happens in the second one, we have a continuation higher, price simply just continues, expands, targets the previous quarter high. And here we're looking at a bit more of a messy delivery from a previous day, but you can see the same thing happens here. So around your first inducement of the third quarter of AM, price manipulates down, takes out the previous low. This is your high probability setup. Now, I've also made this indicator, which is free. You can go ahead and claim this in the link below. So if you want to have these windows drawn out for you, available to everyone, and you can just have this on your chart so you don't have to plot it yourself. And you can basically see, you can turn off, for example, if you don't want to see the second, if you only want to see the manipulation, or you can have the latest macro only, which is going to be just one macro at a time to keep it more clean. So you can see right here, manipulation happens around almost every single one of these windows, only exception being here where you get one more sweep lower before price is allowed to expand. So it's not going to be every single time. So just like any other concept, you use it combined with other confluences to know whether it's going to be the right time for you to enter or for you to look for those trades, which you can see right here. My favorite personally is going to be the manipulation inducement windows. So here and here, because you see they line up with the second quarter and they work really well. In all of these windows, price put in a new low. So this is especially powerful when you get a sweep of the previous quarter, such as here, just sweep rejection. Same thing here. And then you see signs of displacement, you see prices expanding, then you can target the opposing quarter. Now I invite everyone to investigate this, look into these windows yourself. Don't just take my word for it. If you see what I'm seeing with these times and how I'm aligning them with the sessions of interest, you're going to start noticing some very interesting things. So it's completely up to you if you want to start looking into this, but I wanted to put it out there and basically showcase what I'm looking at. Now to summarize, a general rule, you don't have to enter inside of these windows, but if you see, for example, here, the manipulation is taking place, here your setup, then of course, ideally you want an entry, but you can also wait for these windows to finish, and then you expect the low or the high to hold, and then you can enter and target the opposing liquidity. Like I mentioned, if you want this indicator, you can get it for free in the description, so feel free to check that out. Now I know there was a lot of new things going on in this video compared to what I've talked about before, and just wanted to make it clear that these are the sessions and the cycles that I'm now referencing, and going to be talking a lot more about those and showing to you guys very interesting things that you can see and how you align time around these windows. So with that being said, I hope you guys enjoyed, and I will see you in the next one.